Let's move on and welcome Nikhil on the show, representing Centum Electronics. Centum has been running very sharply, and that is because market sees it as a space economy play. In fact, Centum has contributed earlier in different capacities in Mangalyaan and Chandrayaan projects as well. Nikhil, good afternoon, and thank you very much for joining us. First of all, I would like to understand these space-related components, that business, how much of your revenue right now is actually coming from that business, and how do you see it grow?
Perfect. First of all, good afternoon, and thank you so much for having me on the call. I'd like to first start by joining every proud Indian to wish ISRO a huge congratulations on an achievement I think we will all remember for a very long time. And we as Centum are super proud and happy to be associated with this mission. So with that being said, to your question about our contribution in space, today, overall, the defense and space sector, which we overall call as strategic electronics, represents about 45% of our overall revenue. The space part specifically is somewhere in the range of about 15 to 20%. Our journey in space has evolved over the last 20 years. We started off really developing very small niche components, and over time have really grown up the value chain to today delivering full satellite payloads that go into different applications. And I think with the current outlook that we're seeing in the economy, opening up of the sector and promotion of more private sector participation, I think we're seeing a very strong outlook on this sector. Just in the coming year, I think we are expecting to see probably on the order book standpoint at least a 30% increase on our order book in this space.
Nikhil, I was just looking at the profitability profile. Last 2 years, it has been on the lower side. I think there was a one-off as well in one of the numbers, 23. But it has been very on the lower side, right? Q4 of last year, we saw profits improve to double digit, 25 crore or thereabout. But Q1 also was weak. Why is that? The profitability is, slightly, kind of patchy. Is there something pivotal which lies ahead, which will completely give better visibility on profits which going ahead? What exactly is the, right now, the situation and standing on the profitability earnings?
Yeah. So first of all, I would say, I think as a company today, we have 3 verticals that we operate in. One is your build-to-spec products business, which is where we go right from the design to all the way to the manufacturing. Second is manufacturing services or EMS, and the third is engineering services. And if you look at the margin profile, they're quite different for each of these verticals. So the build-to-spec vertical, where we have end-to-end capabilities, that's where margin profile is higher. Whereas on the manufacturing services, on the engineering services, it tends to be a little bit lower. So with regard to our profile itself, at a consolidated level, when you look at our split, we do roughly one-third, one-third, one-third in each of these areas. And our target is to get to a 13 to 15% EBITDA level at a consolidated basis. So the last year, we closed the full year at about 8.5% EBITDA. But yes, you're right, the fourth quarter was good for us. This is largely because the space and defense products piece, which is the high margin build-to-spec side of the business, tends to be lumpy in nature. So, when we deliver a big program like a full satellite payload, that the revenue sort of tends to be lumpy in nature. So there is a certain level of seasonality and lumpiness in our profits, but that's why we ask to view us as a year-on-year basis. And based on that, we, as I mentioned, last year, although we closed at 8.5%, we expect this year to grow that up to 10-11% and increase it further to a 13 to 15% level in the coming years.
This is Vinny joining in the conversation as well. Just to understand one thing, normally it is, we do think that, when it comes to, the space tech business or defense side, the business that you are, that would have a high margin business. So right now, when you're talking about these margins, what is the factor that, why is it that mid mid-teens that you're expecting in terms of margins? What is it that comes in terms of separate segment-wise? Also, if you could explain us that why is it such a low margin compared to what it is anticipated at?
Yeah. So as I said, you're right. The build to spec space products, defense products tend to be at a 20% plus margin profile, which is what we're operating at. But as I mentioned, we have the EMS part of the business, which is a build to print that tends to be at around a 10 to 11% margin, and that itself occupies about close to little less than 40% of our overall consolidated revenue, right? So that's one thing. The second is we also have a significant contribution from our French subsidiary, which is in doing engineering services. This is something that we basically acquired a few years ago, and we're taking various steps from that perspective to basically improve the margin profile. One is to improve the utilization levels. We had certain projects where we had a few project overruns; those will be completed this year. And with all of these, we see that subsidiary also improving the margin profile. So with all of these, I think at a consolidated basis, we are seeing the improvement. But as I mentioned, the build to spec part of the business is at a 20% plus margin profile, but the other businesses average it down to the mid-teens kind of level that you talked about.
Boyd, before we let you go, on the other side of strategic electronics, the EMS part of the division, if you put together that part as well, over the next 3 years, what kind of top line and bottom line number is the company aspiring towards? What's the strategic aim which you have set internally?
Yeah, I think there's lots of exciting stuff happening on that side for sure. Even in the non-space and defense sector, we have a strong presence in electric mobility, railways, and industrial technologies, including clean tech. And we've seen a really strong order intake happening on that side also in the last year. We've added several new customers, either as a result of the China Plus One strategies that they've been employing, or because of Make in India push that basically mandated them to make products in India. And so just last year, we had 40% growth in our consolidated order book as a result of these new customer additions. And so, we hope and expect to see this trend continuing. And so if you just look at, you said just a standalone business, which is our build to spec and the EMS part of the business, I think both of these together, our objective is to do, at least 25% growth year on year for the next 3 to 4 years. And we feel reasonably confident in doing that.
So much, for joining in with us this afternoon on ET Now and giving us an understanding on, where you're expecting the growth coming in for the company as well.